Good day, Junior Tickies. I'm Mrs. Brimacombe. We are going to look now at Chapter 5. The focus is going to be on financial statements. It is very important that you make sure that you study the formats of your financial statements. Your financial statements consist out of the statement of comprehensive income or your income statement and the balance sheet, or another word, statement of financial position. Refer to your theory booklet before you start attempting the activities. Make sure that you study everything related to the financial statements. Throughout all these activities, we are going to look at different ways in which it can be asked. Activity 1 is going to focus on the statement of comprehensive income. You are provided with the information related to your stylish partners, a business that uses a markup percentage of 50% on cost. Required, complete the statement of comprehensive income for the year ended 30 April 2022. Now, when you're doing your exam or writing a test, T accounts is a tool. Use the T accounts if you are not sure, should I add or should I subtract? But when you're doing your financial statements, your step number 1 should be all these totals and balances from the pre-adjustment trial balance. Take it to where it's supposed to go in your financial statements. If you are required to only complete the statement of comprehensive income, you should know that everything from the nominal account section, which consists out of your income and expenses, must go to your income statement. That which is in the balance sheet account section will go to your balance sheet. But now, advice. Trading stock and debtors control. Open up those T accounts as you do the adjustments. Why? Because trading stock, you need to possibly calculate if there is trading stock missing. In other words, is there a deficit or is there a surplus? With your debtors control, a new adjustment to grade 11s is provision for bad debts. Now, we focused on that when we looked at Chapter 4. Now, provision for bad debts is calculated on your book debt, which is your debtors control balance. This means that if there's any adjustment to your debtors control, that needs to be considered when you're calculating your provision for bad debts. So again, when asked only to do the statement of comprehensive income, open up the debtors control and the trading stock T account. Starting now with step number 1. Everything from the nominal account section is taken to the income statement. Take note, they've not asked you to complete note number 1, which is interest income, and note number 2, which is interest expense. This means that interest on overdue debtors account, you should know it will form part of note number 1, interest income, so we're going to write it in brackets next to it. Interest on loan forms part of note number 2, interest expense, so again in brackets next to interest expense, we are going to write it. Adjustment number 1. A credit note was omitted from the debtors allowance journal for April 2022. Omitted means it was left out. So from the pre-adjustment trial balance, we're going to start with the opening balances. Debtors control, the opening balance will appear on the debit side. Debtors allowances, the opening total will appear on the debit side. Cost of sales, because we've got the items back, it means we need to indicate the cost of the goods. This means cost of sales needs to be opened and trading stock. Again, we're starting with the opening balance of trading stock and cost of sales. Cost of sales is an expense, so it will appear on the debit side. Trading stock is an asset, so it will appear on the debit side. Refund on unsatisfactory goods, 2,400, means that debtors allowances is going to be debited and debtors control is going to be credited. To show the cost, we will need to work out the cost using the markup percentage. This means times 100 divided by 150. Cost of sales is credited and trading stock is debited. Always remember that debtors allowances is closed off to your sales account. So when we're completing our income statement, we can say that 2,400 needs to be subtracted from our sales. If you look at our T account, the total brought forward, which is our debtors allowances, plus 2,400, which is the return from the customer. Where do we take this? To the sales. This means that we could have also said in here minus 38,600. If you add those two together, it equals 38,600. Cost of sales was credited. This is why we're going to say minus. There were no other adjustments with regards to sales and cost of sales, so we can close that off. Sales minus cost of sales equals my gross profit. Adjustment number 2. One of the employees was omitted from the wages journal for April 2022. Omitted means left out. We need to add it. It provided you with the basic wage, overtime, hours worked, the deductions, and the contributions. When we're doing income statement, we don't care about the deductions. We only care about our expense, so we're looking at the gross plus the contributions. The instructions specifically said here, all contributions are added to the salaries and wages account. To calculate the basic wage, we're going to take 40 hours times 70 equals 2,800. The overtime remuneration is 1.5 times the normal rate. Hours worked as per clock card was 48. This means that overtime equals 8 hours. But we first need to find out the rate for overtime. If it's 1.5 times the normal rate, we're going to say times 70 times 1.5. Then we're going to times it by 8. The total wage is my basic wage plus the overtime. If we're looking at the contributions, the UIF was given to you, 37. Pension fund, the business contributes 10.5%. 7.5% is deducted from the employee on the basic earnings. That means their basic wage, excluding your overtime. To find out the pension fund, then we're going to say 2,800, which is the basic wage, times 10.5%. That equals 294. So starting with the salaries and wages, the gross wage will be added because it was omitted, so it will be added to the salaries and wages account. UIF, again, the instruction says all contributions must be added to the salaries and wages, so UIF will be added 37 and the pension fund 294. In my income statement, we're going to have salaries and wages plus the gross plus pension fund plus the UIF. There are no other adjustment with regards to the salaries and wages, so we can close the bracket and add the total. So we do it at the same time. Third adjustment, a supplier in Limpopo had overpaid commission in April 2022 by 10,150. This will be offset against future commission earned. So what is happening here? If we've been overpaid in April, this means that we've received an income in advance because it says there, this will also be offset against future commission earned. This means this doesn't form part of our income for this accounting period. Commission income will need to be debited. Because this doesn't form part of our income for this accounting period, we're going to subtract it and then we're going to total to find out what is our total income for this accounting period. Looking at our next adjustment, stock was stolen when one of the shops had a break-in on the evening of 15 April 2022. The insurance company agreed to cover 75% of the total cost. 26,250 will be paid into our bank account during May 2022. So what do we care about here? We need to find out what is the loss. That is the amount which will appear in our income statement. What the insurance company is going to pay us out will go to accrued income because we haven't received that money yet. But now we need to find the total cost of the trading stock which we've lost. Remember, if there's a physical stock count, we need to consider all the changes to the trading stock account. So this is why you need to open up the trading stock. What did they provide me with now? They said 26,250 will be paid into our bank account. Means that accrued income will be debited and loss due to theft will be credited. To find out what is the trading stock amount, the insurance company agreed to cover 75% of the total loss. The total loss is always equal to 100%. So to find out the total loss, we're going to say times 100 divided by 75. Loss due to theft is debited and trading stock will be credited. Now you've got two options. You can take the debit side minus the credit side, and that equals our loss, which will appear in the income statement. Or you could have said 26,250 times 25 divided by 75. In our income statement, we're only going to show the loss due to theft. Your calculation in brackets, you could have just said times 25 divided by 75. That equals 8,750. Adjustment number 5. A physical stock taking on 31 March 2019 revealed the following. Just a correction, a physical stock taking on 30 April 2022 revealed the following. Trading stock 341,260, consumable stores unused 4,750. Consumable stores at the end of last year had not been reversed. So first, if we look at the trading stock, what is a common mistake? A common mistake is we now compare that balance with the balance from the pre-adjustment trial balance, which was the balance in the beginning, instead of comparing it to our new updated balance to find out if there's a surplus or a deficit. So if we take the debit side and we minus the credit side, our new updated balance must be compared with the physical stock count. If we compare, we can see that it's less than what our books are reflecting. And that means that there is a deficit. What else you can do? Take the debit side minus the credit side, and the balancing figure is your deficit of 13,800. I'm going to remind you again, this is why it's so important. Do the trading stock T account and make sure that you get this 100% correct. Consumable stores has a total brought forward from the pre-adjustment trial balance, 38,680. Now we first need to do the reversal entry, which means consumable stores on hand would have a balance brought down on the debit side. To reverse that, we will need to credit the account and debit consumable stores. At the end of this accounting period, Consumable stores unused 4,750. Whatever is left over is subtracted from the expense account, consumable stores, and taken to consumable stores on hand. In my income statement, as part of operating expenses, we're going to add trading stock deficit, which we calculated in our trading stock account, 13,800. Consumable stores from the pre-adjustment trial balance, 38,680, plus 3,500, the reversal entry, minus the consumables on hand, 4,750. That equals my final figure, my total expense for this accounting period. The next adjustment, a debtor owing 5,850, whose account was previously written off as bad debts, paid the amount due. The bookkeeper recorded this in the cash receipts journal under debtors control. So what is happening here? My debtors control, we've received money from a person whose account was previously written off. So bank was debited, but now because their account was previously written off, we have incorrectly shown it in debtors control. It was supposed to be bad debts recovered. This means that we're going to do absolutely nothing with our bank. Debtors control will need to be corrected. To correct it, we need to debit debtors control so that bad debts recovered can be credited to show our income 5,850. Why is this important to know? What happens with the debtors control when we're only doing our income statement? The next adjustment says provision for bad debts must be adjusted to 8% of the book debt. Your book debt is your debtors control balance. So you need to use your new updated debtors control balance. If we look at provision for bad debts is a negative asset, so the balance brought down appears on the credit side. My new debtors control balance, after the returns by the debtor, after the bad debts were recovered, our new balance, 8% must be calculated on the new debtors control balance. Our new balance is 17,716 for provision for bad debts. If I compare this with the balance in the pre-adjustment trial balance, it's less, which means it needs to decrease. Reminder, provision for bad debts adjustment can either be an income or an expense. If we need to increase the amount, that will be regarded as an expense. But if we need to decrease the amount, it means that the provision for bad debts adjustment is going to be an income. Again, take note of the importance of debtors control and the trading stock balance. The first entry in our income statement, we're going to show the bad debts recovered as part of our operating income. Then the provision for bad debts adjustment was calculated. We needed to decrease the amount, was calculated on our book debt, which is the balance of the debtors control. To decrease it, it's regarded as an income. So under operating income, provision for bad debts adjustment, 1,784. The rent for April 2022 is still outstanding. The monthly rent decreased by 800 per month from 1 November 2021. So what's the easy part here? Rent is still outstanding. It means it needs to be added to our expense for this accounting period. What makes this difficult is that I cannot just take the amount from the pre-adjustment trial balance and divide it by 11, because the rent for April is still outstanding, to find the monthly rent that needs to be added. Why? because the monthly rent decreased by 800 from the 1st of November 2021. So if we look at our timeline, we start with the total brought forward from the pre-adjustment trial balance. On November the 1st, our rent decreased with 800. This means that the rent was for 6 months at an X amount. For 5 months, it was at X amount, so in other words, amount minus 800, and 1 month is still outstanding. So how do we approach this? We are going to eliminate the total decrease. So we're going to say 800 times 5 equals 4,000. To eliminate that, because it decreased, we are going to add 4,000 to the 208,300. Now we are able to find out what was the monthly rent. So we can divide it by 11. This is before the decrease. To find out the amount now after the decrease, we're simply going to say 19,300 minus 800. Because this is still outstanding, this will be added to our rent expense. In my income statement, we are going to say plus 18,500 to the rent expense. So this will be our total expense for this accounting period. Insurance included an amount of 2,160 for the period 1 September 2021 until 31 August 2022. This total from the pre-adjustment trial balance. 2,160 is included in that total, which was paid for a period of 12 months. We only care about what falls outside of our accounting period. Whatever falls outside of our accounting period must be taken out. This means 8 months should be included, 4 months should be excluded. To find out the amount that should be taken out, take 2,160 times 4 divided by 12. A common mistake. Learners tend to use the 48,300. Please remember, it says included into that total is an insurance that we paid for 12 months. To take it out, it means insurance is going to be credited and prepaid expense would have been debited. Now, income statement, we only care about our income and expense, which means insurance, we are going to say minus 720. So this will be our total expense for insurance for this accounting period. Our last adjustment, the bank statement received from Swazi Bank for April 2022 reflected a balance of 87,200. Now, if we compare that balance of 87,200 to the savings account in the balance sheet account section, 85,000, we can see that the balance now on the statement received is more. Why is that? Because the business received interest on that savings account. Interest on savings account is an income to the business. It will form part of note number 1, interest income, which means that we are going to add it to interest income on our income statement. So now that we've done all the adjustments, we can close all our brackets and do the final calculations on our income statement. So starting from the top again, sales minus cost of sales equals your gross profit. If I add all my other operating income, we're going to take gross profit plus operating income equals gross operating income. When you're looking at your operating expenses, you do not write that in brackets, but you must please remember that the total must be written in brackets. Gross operating income minus operating expenses equals my operating profit, plus interest income equals operating profit before interest expense minus interest expense equals my net profit. These are your main parts in your income statement, which you must make sure that you understand, because it's going to get to a stage where you need to find missing amounts, missing pieces, and you need to be able to work backwards. Thank you very much. Next, we're going to look at activity 2. I'm going to leave you with this quote. It's not the time to look for excuses. Have a wonderful day.